I'm going to complement my views based on certain facts. If you in the first 9 months of 2023, if you see the banking industry data, the advances remain the constant, while the deposits have increased by 20%. On the other hand, the investments have also increased by 25%. The ADR ratio, it's basically reduced from 50% to around 43%. So it's clearly that the bank are reluctant to lend for advances perspective. So having said that, if you also see the other indicators like the loans to SME as a percentage of total advances, in Pakistan, it is basically reducing at a 20% rate every year, and now it stands at 3.6%. And if you compare it with the regional economies, where the private sector credit as a percentage of total GDP, in Pakistan, it's around 11%, but in the other economy, it's almost 3 times what we see in Pakistan. So these all indicators, basically, it's quite clear that the banks are not lending to the SMEs because they are basically looking for a less riskier investments. On the other hand, out of the total population of Pakistan, which is close to 220 million, Pakistan has the third largest unbanked adult population globally. And in terms of numbers, there are more than 100 million adults who do not have a bank account. So considering these all indicators, there is a lot of room available for digital banks, and digital banks can play a very pivotal role in the financial inclusion. Digital bank can play a role in financial inclusion by onboarding the customers digitally. They can also complement the State Bank forward-looking national strategy for digitalization, as well as the vision for the digital Pakistan. They can provide easy access to credit through the digital loans. They can analyze the credit history through the credit rating models, and they can provide loans to the underserved segment of the society. Then there is an opportunity for collaborations where they can, based on that, they can provide an affordable financial services to customers. So overall, digital banking have a lot of opportunity, and they can make a big impact on the financial industry. As you see that in Pakistan, the cash is always a king, and the cash transaction has always been a norm. As per the State Bank data, the total cash in circulation is close to 9.2 trillion, which is around 11% of the total GDP. And if you compare it with the other economies, the number is very less. So there is a lot of circulation, and this is challenging for us. There is another indicator, which is the paper-based transactions. And if you compare the paper-based transactions with the total transactions, the paper-based transactions are around 25%, while the digital transactions are around 75%. So 25% cash transaction in Pakistan, as compared to if you compare it with the other economies, the number is less than 1%. So there is a lot of improvement, and there's a lot of opportunity available with the digital banks to basically promote and convert the cash into a digital economy. In order to do that, yes, I think the private banks, as well as the public and also the State Bank, they need to play a pivotal role in promoting the digital banking. And one way to do this is to provide an incentive for the digital transaction. Basically, the key focus areas for a digital bank would be women, youth, salaried professionals, freelancers, non-resident Pakistanis for the individual segment. And out of the total 5 million businesses in Pakistan, 4.5 million are MSMEs that contribute to 40% of the GDP and 80% of the non-farm labor. So specifically in the MSME segment, the digital bank, I think they should focus on the offline retail and distributors, linked SMEs, as well as value chain should be the focus area for the for the digital banks. And the problem with the MSMEs, the main problem is basically that the commercial bank do not lend them, and because the main reason is that they cannot evaluate their credit worthiness, and they are not willing to take risk. And this is where there is a opportunity for the digital banks. So digital banks, what they need to do is basically they need to reimagine and automate their lending process. Technology is going to be the differentiating factor. Then they need to analyze by taking into account the present available data as well as the future looking data for credit assessment. And the third is that digital engagement. By means of digital engagement, I mean that they need to engage with the customer through their digital means. One of the other indicator is that I want to basically share here is the number of mobile banking users as a percentage of total account holders, which in Pakistan is close to 25%. And if you compare it with the other regional economies, that number is around 80%. So there is also a big room available for the digital engagement also. For that, yes, as I already mentioned, there is a need to promote the digital banking, and the government has to play its role. And how they can basically promote is by incentivizing the digital transactions at retail level. Break those challenges into two. One is the ground realities, where the first is that there is a big segment who is not aware of the digital banking products and services. That's the biggest challenge. Then there are challenges with respect to account ownership and documentation, particularly in the women due to social dependence. So this is the other major one. Then there is a lack of credit history and credit bureau information. There is a lackness of that. So that's again a challenge that we are facing. Then, of course, the rising inflation is one of the biggest challenge. Then low documentation of economy, which means that there is a minimum information about taxes paid. So that's again a challenge. Then there are a certain type of customer segment who are not willing to undertake non-Sharia based financing. So that's one of the challenges that those micro banks are facing, who are not giving Islamic products. And then the most critical is that still there is a little reluctance by many customers that they prefer cash-based transaction as opposed to the digital transaction. So these are all the ground realities. Other operational challenges include for the banks is that the rising IT cost and the cost to meet the security requirements. Then we need to reduce the transactional cost for digital transactions, like the Nadara cost of biometrics is expensive, the SMS cost is expensive. So this is again a challenge for the banks. Then the other challenge is that there are areas, the geographical areas where the network or the internet connectivity is not available. So that's again the challenge for us. Having said that, they need to work more on the customer facilitation side, and they need to innovate how to approach the customer and how to satisfy the customer. They need to invest on the WhatsApp banking and the other mediums available to communicate the customer. And the last is that they need to have the product or services available for each of those segments which are underbanked or non-banked. For example, they need to have a specific saving products for women. They need to have a product for freelancers so that they can bring in as well as pay the amount in dollars. And so basically they need to have more innovative products available in their basket.